Hello and welcome to another update video about Render. Continues to be a bit of a messy chart. It just has to do with the situation that Render is moving in this ascending price channel. It's not clearly impulsive price action. It's rather a diagonal, or at worst actually a very corrective upward move, which is going to head to new lows. But as long as we're holding support, we can focus on higher. There are two bullish wave counts I'm looking at here. So the first one is the one that we actually have on the chart, that we had this five-wave move to the upside, and the fifth wave is still unfolding, and the fifth wave is unfolding as an A wave, a B wave, and a C wave to the downside, the upside, as we have a diagonal structure. So the sub waves of the fifth wave are three-wave structures. Okay, so or at least the fifth wave itself is a three-wave structure. So if we look at this wave count, we can say that wave 4 bottomed here on the 12th of May. And we are dealing here with, I think I deleted for some reason these sub-waves here. Let me just add them again. This would be an A wave to that high, which was made on Sunday, the 21st of May. The B wave down and the C wave to the upside could be unfolding now. I'm going to take out here these sub waves, don't need them at the moment, but yeah, A wave to the upside, and let me just, I think I need them actually, so let's bring them back. Okay, now there you go. And in this move down here, so A wave to the upside topped, okay, the B wave to the downside bottomed here on the 15th of June. Against that level, the focus can be on higher. We had a bit of a micro support here in the last video that was broken, indicating that it's not going to be a straightforward impulse to the upside in this C wave. So it could just be, again, another diagonal. I already explained in a previous video that Render likes to move in three-wave structures, ultimately making this chart less suitable for Elliott wave. We can be very clear about that. Because there are charts that lean themselves better to Elliott wave and some that lean themselves not so well to Elliott wave, at least not on certain time frames. Okay, so this, anything that moves in, I shouldn't say it doesn't lean itself to Elliott wave, but Elliott wave tells us that we are in a pattern in which we have to expect that the wave counts change and morph a lot, because it helps us identify those three-wave structures. And when something is moving in three-wave structures, we have to expect that it moves a lot, because it is corrective, and there are just many corrective patterns. Hopefully that explains it. So, what could be the case? I mean, if this C wave is a diagonal, then the wave 1 could already be in an ABC. This here could be at some point a wave 2 low. And again, as long as it's holding the 171 level, this 15th of June low, the focus could be on higher here in this particular structure. We should get a third wave, a fourth wave, and a fifth wave. That's sort of similar to what we look for on the Bitcoin chart, but let's see if we get there. But certainly the condition would be to hold 171. Now, another explanation why this is a difficult chart from an Elliott wave point of view is that because it's a three-wave move to the upside here, it could easily head to the downside. But then the break below 171 would confirm that for us. What is the alternative wave count? This is one bullish wave count, but the condition would be to go ahead with this count and to follow it, we need to hold 171. Now in the other wave count, I think we talked about that one before, we have a wave 1 here to the February high, then an A wave down in three waves, an overshooting B wave, and we're now coming down in a C wave. This C wave would be a wave 1, a wave 2, a wave 3, a wave 4, which is a bit deeper than ideal. But again, we can talk about a diagonal structure here, and one more low. Now the question is, how low does that one go? But it should go below 171. And then we just have to look at, okay, is it an expanded flat or a running flat? That doesn't make it easier. In a running flat, the C wave would end above the A wave low. And in an expanded flat, it would end below. So we have a support area for this pullback in an A, B, C structure of wave 2. Pullback area between 130 and 77 cents, but this would only get active if price breaks below 171. So these are at the moment the two bullish scenarios. I think the key level, the absolute key level here is 171. And that's sort of the dividing level between a more bearish but still bullish setup or scenario, in which price can come down to 130 at least, or something where price still has a chance to rally higher, but it won't be an easy ride. So it's a bit of a difficult chart. Honestly, it's not clearly impulsive. The chart history isn't the longest, so it makes it quite challenging, but certainly we can see it is in an uptrend. You make higher highs, higher lows. We can identify the trend channels. We can identify support areas. So obviously we're considering other aspects here. But yeah, the trend is up as long as support levels hold, and the support level here is 171. Below that, the key bullish support is 77 cents. I don't see anything clearly bearish until it breaks below 77 cents, but it's a chart that involves more uncertainty than other charts that provided clear impulsive wave structures. All right, that's my update about Render. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.